Welcome to the TMT Stock Market Strategy video for Friday, May 13th. Well, we got a little bit of a push lower, and then we actually reversed into right around lunchtime and just kind of gradually went higher. That's what's happening of late. A lot of the algos continue to, one side, it pushed the market straight down, then reversed, pushed the market straight up without any type of entry, good solid entry anyway, unless you're closing your eyes and just getting in. So a little frustrating sometimes for the day trader, but nonetheless, we are getting volatility. And I mentioned I didn't have a video yesterday, but I put out an email just saying, look, be careful out there because I believe in the next week or so, I'm going to probably call an official top in this market. All right. Everything is not what it should be. It looks pretty weak, a little dismal here. Now, we are coming into options expiration, so I do expect to see some sort of a low in place today, tomorrow, maybe even Monday, and then kind of meander around, rally a little bit, maybe even slightly down, but no big real movement because of the fact that the large funds, firms, hedge funds, what have you, sell a lot of premium and they want to keep it that way. So not that it can't happen, guys, believe me, but I'm just saying is that I usually, going into options X, we usually have a bullish bias for the week. Now, after that is where I believe that we should start seeing some really good market declines in the marketplace. And remember, it doesn't have to happen. It's just based on what I'm seeing on technical analysis. Everything could change in a matter of minutes, actually. Somebody could say something positive for the markets, and then the markets rally again. Remember, it is an election year. I don't suspect any big market crashes happening at all. Mr. Obama likes to go out with his head held high. And everybody's good graces, obviously. That's what he's trying to accomplish. So I don't see any real big market movement until he's really out of office, which would be November. But we are going to see some volatility. Volatility is picking up, so I'm really excited about that. And what I want to show you is this is why I'm nervous, and I say nervous meaning that what we're seeing here is the breadth of the market deteriorating from behind the scenes, and I could see that happening. And remember, there's a lot of manipulation going on in a lot of these equity markets, and that's why you have to be diligent and be patient enough to wait and just wait for positive entries, good entries in the markets. Okay. Now I identified the head and shoulders pattern, and I put this question mark right shoulder. Well, we're building the right shoulder now, so that does look like a really good head and shoulders pattern. What I'm going to do is I'm going to actually just going to get on here and just eliminate that because I'm going to call that a right shoulder. I think that looks pretty damn good, and I'm going to get rid of that arrow because that wasn't there before. And then we're going to label a neckline right up into here, and I just want to put that. Let's just make it brown. It doesn't matter. And there we go. All right. So there it is right there. There's the head and shoulders pattern. Needs to break. Obviously, we have a little bit of area of support, the 50, the neckline itself, and then of course the 200-day moving average. So, but I'd like to see this. We take that out. We'll probably flush to the round lot number 200. But my guess, guys, is going to be one of these two areas here of where we're going if this does and were to happen. Okay, this area here, 193.50, 187. The head and shoulders actually measures down about $7.50 from the neckline. So if you're at 207.34, and then you take 750, and that'll get you 199.80. So let's just say 200, right? Yeah, so right around that area. You're looking at about $7.50. So we'll just go like this, really. Make it really simple and easy. I always like to do this myself. Take that top to the head. You bring it down to the neckline. You measure it from the center, and there you go. There's your target, 195.91, 195.80. Call it. That'll be your target for the head and shoulders pattern, somewhere around that area, give or take a couple pennies. All right, now let's take a look at the 60-minute. As mentioned, I mentioned that small head and shoulders that formed worked out well. Remember last week we called that bullish fallen wedge pattern. Worked out great. These are the two targets where I was looking for a sell area, 209.22, and then of course the 208.20 that actually happened. That was a 61.8% retracement off the high from the low, and then we actually had a nice little sell-off. So We have numbers coming out this morning, CPI numbers and Michigan sentiment. That's going to be a big market mover, especially for the dollar. So, we are down a little bit. We're down about 550. That's not going to matter. If the market likes it, it'll take it all back and start to rally. So I just want to let you guys know that, all right? Be careful for this morning. All right, next, the transports. This is why I mentioned the fund managers will take note of this. Here's the 200-day moving average. We failed miserably 2 days ago, and yesterday we just continued down lower. This will not go unnoticed, guys. The transports are the leaders, deemed the leaders of all U.S. indices, and this is not a good sign. Okay, Russell 2000 held up relatively well yesterday. It's clinging to the 50. The next area of support is going to be the 106, 107, call it, 107 area, and then, of course, these two numbers down below here, okay? But you could see that things are starting to break down a little bit. Diamond, same thing. You could see here we're kind of stuck in this area, but we did a back test, and now we're starting to sell off a little bit here. So something to take note of, guys. Like I said, I do believe that the market is in a topping phase, and we will top in the probably next couple of weeks. All right, and same thing here with the Qs. Now the Qs really have gotten battered because Apple, and again, it's not as weighted anymore, but Apple is in pretty much a lot of the ETFs that are out there. And you could see here we had a nice little bear flag in the Qs, and then we failed. And let me just move that out of the way so you can see that. So we failed miserably. First target 102.70 off the daily chart. That's going to be the bigger target, and then we'll reevaluate as it goes. All right? Hope it helps, everybody. Be careful today. Remember that CPI number coming out at 8:30, and then Michigan sentiment at 10. Have a great day. Enjoy the weekend. We'll see you on Monday.